Welcome to Kaizen Time, part of the Blood, Sweat, and Business podcast, where we provide constant improvement to businesses through timely, actionable financial solutions. Do you want answers to your financial questions? Email us at bsp@kaizencpas.com. I'm your host, Mark Valesky. Now let's get started. Welcome to another episode of Kaizen Time. I'm joined by Eric Jorn, a partner at the firm. What's going on, Eric?
Oh, not too much.
Not too much. It's a lazy post-tax day. Chilling in the podcast room with me.
I think this is our fun time.
It is a relaxing time. And now I'm going to ask you a not relaxing question, which is, how do you evaluate a CPA's performance? So, and I'm not saying like you specifically or a firm specifically, but what is kind of some metrics that you would use when you look at what firms have done and been like, wow, this is not doing great, or this is underperforming? What could be done?
Definitely. Well, metrics, that's a hard thumb to put on anything, especially a relationship with the CPA, because depending on what type of services you're getting, what type of your business is, or even the goals of your business could, if my goal is to stack as much cash as possible inside my business, I'm going to be paying a lot more in tax than the person who's building and reinvesting in their business. So say you want to use, how much I'm paying in tax, my percentage tax rate. Mm-hmm. Well, that's probably not a very good consistent metric. Now, here's what I will tell you. The most important thing that I think you can measure in your CPA's performance is how good is my relationship with them. So CPAs are 100% in the relationship business.
And most people wouldn't think that.
Exactly, right? They're, a lot of times it's a commodity type service, right? Hey, I'm going to drop off my stuff. You're going to turn around and give me a tax return. You might turn around and give me a financial statement, which is fine, right? The work's getting done. I'm staying alive. Mm-hmm. But you're leaving a core member of your advisory group that should be participating in your business.
So when I was actually thinking about this, I was thinking about what's the greatest strength and greatest weakness. But really what you're saying is that relationship, communication, that is either the greatest strength and or greatest weakness.
Yeah. Yeah. So here's an easy bar, right? Can you get your CPA to respond to you?
That is that's like putting the bar on the floor.
Yeah. Right? We talk to hundreds of business owners a year who are working with a different accountant. Mm-hmm. And the number one complaint that we hear over and over again is my CPA doesn't talk to me, which is totally understandable.
Really? Because I don't think that's really understandable.
No, it is. It is. The industry has been broken for a long time. Mm-hmm. The goal, where people are bred through, say, the big four firms, right? And what do? You get in there and they give you a bunch of work and they have you grind out work. And that's what they teach you to do, is to grind out work. Mm-hmm. So then those people eventually exit working for them. And if, say, I go start up a new firm, right? What am I taught to do all of my career? Grind out work. Mm-hmm. Well, if I'm sitting there grinding out work, how am I going to spend time talking to my clients and understanding my clients and their business and turning what could be just a commodity into really a strategic asset for their business?
Interesting. So I know we've talked a lot about being able to communicate and knowing where our client's going and helping them achieve that. And that is, of course, done through communication. Is there a metric to doing that, though? Is there something where we find out like, hey, this level of communication is a sweet spot? This is where we find that works for people.
Yeah. Yeah. So we're business owners. We're busy. We're very busy people, right? To get even the baseline of stuff done, we have to probably be nudged a couple times to get what we need to, say for my accountant to handle the baseline, the compliance part of their work. Mm-hmm. Right. Cause we're busy, right? They might send you an email. Hey, and I'm sitting in a business owner's seat. So I've grown to appreciate that position. Hey, can you send me this, or can you answer this question for me? Sure. I'll get to it. Oh my God. Now there's a fire here. There's a angry customer here.
This is the many
this bank account. Yep. This bank account over withdrew. I have an employee quitting. I have something going on that's going to draw my attention away. I need to get followed up with a few times. So, some people like monthly communication, but I'll be honest, most business owners don't have the time, energy, and effort to talk, to focus, to get really good quality time, thinking about the financial aspects of their business. Once a month might be a little bit too much to have a really in-depth conversation. Should they be looking at their financials every month? Absolutely. An in-depth conversation. If I'm a business owner and I'm wearing a lot of hats, which most of our business owners are doing, probably not.
So I guess a good answer to this would be partially based on the owner, right? How much do they really want to get involved? How much do they need to? It's size of their business and so on.
I think 3 times a year is a really good number to think about, right? So chances are you're going to talk around tax time, right? You have a result from your tax return. We need to talk about that. We need to be talking about quarterly estimated tax payments. It's super important to have that figured out. That's from the tax side. We also got to think about and forecast what this year is going to look like, so you can set the stage of what your business should be doing, the direction it should be going, and how you should be thinking about your business. Then probably, again, talk in the summer, see how things are going, right? We're halfway done through the year, maybe a little bit further along. How are things going, right? You can really start to see trends developing. We can start making some strategic decisions for the business based on, how things are progressing, and maybe get a really good forecast for how the rest of the year goes. And then probably once again, right before the end of the year comes, and hey, do we need to make any decisions from a tax standpoint? And how are we going to wrap the year? And what is the next year going? That's that first peek into what is the following year going to look like, and what kind of things we can put in place to start the year. I think that type of cadence is probably a really nice balance for your typical business owner who's wearing multiple hats in the business, and he's sitting in every seat within the business. I think that's a good cadence.
Okay. So,
and these are formal conversations, right? I'm not talking about, hey, I got a quick question. Here's an email. Hey, this is what I got going on. I'm talking, this is a formal sit down.
Plan scheduled, half an hour to an hour.
Exactly.
Really meat and potatoes kind of thing.
Yep.
So how else, aside from this really core relationship building communication, what else would you say affects the performance of a CPA?
Yeah, I think here's a good question is, ask your CPA, what does my business do?
Wow.
You might laugh, but now there's obvious businesses, right? If I have a restaurant, I might know what it is, but do they know what type of restaurant it is, right? Do I Mexican food? Do we serve Chinese food? Do we serve American food? What do we do?
Yep.
Am I a quick service restaurant? Am I a full service restaurant? If I'm an auto repair shop, right? Am I all makes and models? Am I a Euro specialty? Am I a diesel specialty? Am I a tire shop? If I'm a distributor, what do I distribute? Who are my customers? If I'm a manufacturer, what do I manufacture? Right? Ask them, do they know, say I do, say I'm a machinist. Do they even know what we do? Do they understand what we do? Right? Because if they don't understand what you do, it's really hard for them to give you information on how to run your business.
It's true. Now, I want to ask you this from the financial and taxing standpoint. How does that work with that level of communication? So, for example, they may not understand your business, and that may not be a essential prerequisite. But I want to say that they should at least be curious.
Curiosity is a great attribute in a CPA.
So let me ask you this. Let's say you are servicing a client that you have never serviced before in your life.
Yep.
What should that conversation look like? That initial one.
Oh, that's great. That's a great question. I would like to know what's the origins of your, how did you get into this business? What are you doing? Who are your major customers, major suppliers? What makes your business different than another business in your exact industry? What does your business type look like? Where do you want to take the business, right? Or you want to keep it a small little controlled thing? Do you want to grow it? Do you want to expand multiple locations? There's all these important questions that you can ask that kind of right. So here's a bad fallacy that we have in the tax space. everybody wants to pay the least amount of tax as possible.
I hear this a lot.
There's an inherent truth. I want to pay the least amount of tax possible. But the proper way to think about it is I want to pay the least amount of tax possible while hitting my goals. So if my goal again is to say my business has gone through a lot of really rough times, right? I've had to scrimp by, I've had to sell personal assets to make my business go. We've turned the corner. We're making money. Mm-hmm. I would need to build up emergency savings. I'm going to do a tax plan with that person significantly different than I'm going to use a leverage than business owner over here who says, I'm going to use a leverage buyout tax or acquisition strategy, and I'm going to grow a unit every single year. Those two tax planning situations are going to be entirely different because they have very different needs, right? This business over here who wants to build 6 months reserve, they're going to have to pay tax on that cash to keep it in their account to build those reserves. This guy over here, though, their focus is going to be, how can I get enough cash available to do my next down payment on this business acquiring? And how can we tax structure these acquisitions to maximize today's tax benefit and also to protect my future cash flow?
Interesting. Eric, one last thing that I want to ask you, and we've kind of gotten off subject because this is about evaluating a CPA's performance, but would you say a good CPA would be able to look at any business and kind of still put it in the same buckets? By that, I mean, hey, we're still doing the same tax strategy. It just looks different. Instead of a mixer, it's a truck. Instead of a fryer, it's it's a ventilation system.
Yeah. What's super interesting, one thing we've learned over the years is that all businesses have some very similar core attributes to how they function. And even from just a general finance, but all the way up to a tax strategy, right? Those foundational items aren't going to change all that much. However, when somebody has an understanding of your specific industry, they can talk your language, right? They might be able to add another layer. It's icing on the cake if they know that. But if they understand the fundamentals of a business very well, right? Hey, I'm going to sell something. I have direct costs. I have indirect costs. Mm-hmm. I have to have margins to meet these certain things. Once I hit a certain level of sales, am I going to outrun some of my fixed costs and my margin will increase, aka economies of scale? Mm-hmm. Do I understand that from a finance standpoint, right? Now I can help you understand cash flow forecasting and budgeting on a business. From a tax standpoint, again, we're mostly all doing the same type of thing. At the end of the day, those things aren't going to matter all that much.
Wow. It is interesting because you think about how unique these businesses are, but from the financial standpoint, which is what we see here at the firm, it's in so many ways the same.
Correct. Business. I mean, I'll do this with the automotive repair industry. I do have a specialization in it, but I can take their business and I can stack it to a restaurant and I can change a few words on each P&L and have the same exact conversation. I mean, aside from a few words,
from the 5,000 feet up, they all kind of pretty much look the same.
Correct.
They all offer a function. They all are spending money. They all have employees that they need to pay. And they have revenue coming in.
Exactly.
Right? Perfect, Eric. Thank you. Anything else you want to add?
No, right. What is my most important thing to evaluate my CPA's performance? And that is everything about your relationship with them. And if you don't feel like you have a relationship with them, then I think that's the point in time when you ask yourself, are we in alignment of where I want to do or what I want to do with my business and where I want to go with my business?
So, and now you saying that makes me want to add something. So I worked in many industries in my life, and there are two essentials to the job. There's one, being able to do the job. So from a CPA component, being able to complete the taxes, being able to see them, break down, look at the numbers.
Yep.
And then there's the actual working with the person, because no matter what, you're still working with people.
Yep.
And if you're not able to communicate, reach out, then realistically, you're not doing all the service.
Exactly.
Perfect. Thank you, Eric.
My pleasure.
You've been listening to Kaizen Time, part of the Blood, Sweat, and Business podcast. If you like what you heard, subscribe and leave a 5-star review. This podcast has been brought to you by Kaizen CPAs Plus Advisors, providing advisory and accounting services to help you grow your business. Learn more at kaizencpas.com or email us at bsb@kaizencpas.com.